This is a video demonstration on investments. In this video, I'm going to work the solution to example number 4. This example involves the Carter Company, and they had the following transactions during the year. If you look at the requirements, number 1 just simply says to prepare the necessary journal entries for these transactions. So for every single transaction, we will record a journal entry. And these are going to involve not only investments, but also there's going to be some international transactions that are in here for good measure. Now, January 1, they purchased 1,000 shares of Apple stock for $50,000. The purchase represents less than 20% and is classified as available for sale. And we have to know that because the way we account for these investments can sometimes change depending on the percentage of ownership. But as long as we're less than 20% ownership, we don't have to worry about it too much. So in this case, this transaction is occurring on January the 1st. It is a $50,000 investment. We are spending cash, so I know that cash needs to be credited. But on the debit side, I'm going to have to somehow record the investment. Now the way I'm going to do this is debit investment, then I'm going to put the name of the company, which is Apple, and then AFS, which stands for available for sale. And that way we know the proper categorization, and by labeling it as Apple, it'll just make things easier later on when we start selling these investments and trading and things like that. It'll just help us to identify which investment belongs with which company. So that takes care of that transaction on the 1st. Now on January 30th, it says Apple declared and paid a 15-cent per share dividend. So this will be on the 30th. Now in this case, we're going to be receiving money, so we will debit cash. And what are we receiving? We're receiving a dividend. Well, that's revenue. That's a source of revenue for us. So we'll just credit dividend revenue. And this is interesting because previously, in a previous video demonstration, we dealt with dividends before, but we were paying dividends. This one's different. We're receiving the dividend. So in that case, it's just revenue. So we have to figure out the amount. Now, it is a 15-cent per share dividend on Apple stock. How many shares of Apple do we own? We own 1,000. So basically on the 1,000 shares, for every share we're entitled to 15 cents. So that's $150. So we've already made $150 off of our investment in Apple. The next transaction is on February the 1st. We sold merchandise to the Sumitomo Company of Japan. The merchandise was sold for 2 million yen. Payment is due in 28 days. The current exchange rate is 0.0087. So in this case, this is pretty much a standard credit sale. And in this case, that means the company owes us money. So we're going to debit accounts receivable. And then we're going to put the name of the company that owes us, which is Sumitomo Company. That'll just make things easier later on. It's good to have those things identified with the specific name of the company. And then we'll credit sales. That's a pretty standard credit sale journal entry. But what about the amount? Well, now we have a little bit of a problem. This is an international company, and this merchandise was sold for 2 million yen. Well, we have to record our financial statements in dollars. So we're going to have to perform a conversion. And it says the exchange rate on that date is 0.0087. So 2 million yen multiplied by the 0.0087 means that on that day, based on that day's exchange, 2 million yen is only worth $17,400. So that takes care of that transaction. Then on February the 15th, another investment. This time we're investing in Walmart. 2,000 shares. We're going to pay $110,000. It represents less than 20% ownership and classified as available for sale. So this is on the 15th. It's an investment. It's an investment in Walmart, and it's AFS for available for sale, and we'll credit cash to show that we're spending the money, and the cost of the investment is $110,000. So that's a pretty easy one to record. February 28th, we are now receiving the amount due from Sumitomo Company. Now the current exchange is 0.0085. So this is on March the 1st. We're going to receive money. It's on an account receivable, but I'm going to skip a space because it looks like those exchange rates have fluctuated a little bit. Now I can remove the account receivable from my books, and this is the Sumitomo account receivable. And here's where the labeling comes in handy. If you look at this, if I go back and look for the Sumitomo account receivable, where do I see that? That's up here on February 1st. That was $17,400. So I'm going to use the same amount down here. But on cash, I'm going to use a different amount. I'm going to use the current exchange rate. The current exchange rate is 0.0085. So when I finally get these 2 million yen based on this current exchange rate, what is it really worth at this point? Only $17,000. So in that case, I have a difference there of $400. I've lost $400. And what is that? That's a foreign exchange loss. So sometimes we're vulnerable when those exchange rates fluctuate from time to time. Next transaction is on March the 1st. We're going to sell the investment in Apple for $54,000. So in this case, actually I realize I've dated that one wrong. That was on the 28th. This one is the 1st. So in this case, we're finally going to get rid of our investment in Apple. We're going to sell it. And you know, if the opportunity provides itself and we can make money on it, we'll certainly do that. So we'll debit cash to show we're receiving the money. And then we're going to get rid of the investment. I'm going to skip a space there because I might have a gain or a loss. So in this case, I want to remove the investment, Apple, AFS for available for sale. Now here's where labeling comes in handy again. Where do I see my investment in Apple? It's all the way up here, $50,000. So when I remove it, I'm going to remove it at $50,000. But on the cash, it says that I actually sold it for $54,000. So that's a difference of $4,000, and that's good for me. That difference is actually a gain. We actually made $4,000 by selling it. Remember, if you have gains, they're always on the credit side. If you have losses, they're always on the debit side. Always remember that. That's true for any situation. That can be a very helpful thing to remember. So that takes care of that transaction on the 1st. On March the 30th, recorded the quarterly fair value adjustment. At that date, the Walmart market price per share is $56. So this is on March the 30th. Now remember, every quarter we're going to do these adjustments. And it's the first quarter because it's January, February, March. It's the end of March. Now we only have to do this adjustment on stocks that we still own. And at this point, what stocks do we actually own? Well, we did have an investment in Apple, but we sold it. So really right now, the only investment that we have is that Walmart investment. So we want to figure out, did the value of that investment go up or did it go down? And that will affect how I do the journal entries. So in this case, they're just simply telling me the market price is now 56. I don't necessarily know what I paid for it to begin with. So go back up here to the 15th. This is where I bought the Walmart stock. Now I bought 2,000 shares and I paid $110,000. So think about that. What did I really pay for it? $55. So basically it has gone up in price $1, and I own 2,000 shares. So it's gone up in value for me $2,000. And since that's a gain, I'm going to credit unrealized gain. Now, why am I crediting unrealized gain? Remember, losses are a debit, gains are a credit. And this is an unrealized gain because I have not actually sold this investment. I'm just saying that if I sold it, I would gain. So it's unrealized. And then by default, we debit fair value adjustment. So that takes care of that end of quarter adjustment. And occasionally those turn out to be losses. If they turn out to be a loss, you would reverse those titles. You would debit unrealized loss and credit fair value adjustment. So you can move that around to suit whatever the situation is. Next transaction is on April the 1st. Now we are going to sell off the Walmart investment. And, maybe it's good for us to do that. If it's losing money, maybe it would be better to go ahead and get rid of it now. So that means that I will receive cash. And it also means I have to get rid of my Walmart investment. I'm going to leave some space in between because I'll probably have a gain or a loss. Now, what was the original value? If I go up here and look at my Walmart investment, $110,000. So I'm going to credit $110,000. But it says I sold it for what? According to the transaction, $107,000. So I'm only going to debit cash for $107,000. So there's a difference there. And how much of a difference is it? It's a $3,000 difference. And in that case, that is a loss. So sometimes we lose money on these things, and maybe it's better to go ahead and sell it now before the value goes down even more. Next transaction is on the 30th of April. Purchased merchandise from the Garcia Company of Mexico. The merchandise was purchased for 50,000 pesos. Payment is due in 30 days, and the exchange rate is 0.0924. So this is a credit purchase. So anytime I purchase merchandise, I have to debit merchandise inventory, and I'm going to credit accounts payable because I didn't pay for it. It's a credit purchase. And when I do that, I'm going to put the name of the company to just help me identify which payables belong to which companies. Now, what is the price? 50,000 pesos. The exchange is 0.0924. So 50,000 pesos times 0.0924 means that in terms of the current exchange, 50,000 pesos, what would that be in dollars? Only 4,620. So I'll book that at 4,620. And then the final transaction on May the 30th, we're going to pay the balance due to Garcia Company, and the current exchange is 0.0928. So this will be on May the 30th. We're going to pay them the amount due, which means we're going to get rid of the account payable. And we're going to pay for it with cash. But I better skip a space and give myself some extra room on cash. Now we booked that account payable at 4,620, but when I pay for it, I'm at the mercy of the exchange rate. So right now the exchange rate is 0.0928. So I'm going to have to pay 50,000 pesos based on 0.0928. So really I'm going to pay 4,640 rather than 4,620. So that's a $20 difference. And what is that? That's a foreign exchange loss. So sometimes you win, sometimes you lose because you're at the mercy of those exchange rates. So that completes the final transaction, and that completes this example on investments.